So this transaction would enable Andean Precious Metal to fill and increase their capacity utilization. And also because the Pulicayo grades are about doubled of what the grades they're processing right now. Within 3 to 6 months, we're going to see likely increased production, marked increase in head grades, better recoveries, and better cash flow for Andean. And that translates for Silver Elephant is the transaction protects Silver Elephant's cash flow.
Meet John Lee, the visionary founder, CEO, and executive chairman of Silver Elephant Mining. Join us as he delves into the captivating story of the company's pivotal role in the rapidly evolving silver production landscape. As we venture into a decade characterized by extraordinary growth and soaring demand for silver, discover what sets Silver Elephant Mining apart from the rest. They are one of the few companies ready to seize the impending surge, potentially unlocking a prosperous era that could span decades, while others struggle to catch up. Don't miss this exclusive conversation about the future of silver production and the exciting opportunities it holds.
Given today's uncertainty, rising interest rates, inflation, infrastructure, logistical bottlenecks, there are fewer and fewer new mines that are being put in production. I would say that our project is one of the very few in this producing category. It's what they call the brownfield exploration. Pulicayo had a historical production of over 600 million ounces of silver since the 1800s. It was actually the silver from Pulicayo that helped the Spaniard conquered the world back a couple hundred years ago. Keep in mind that the technology they used to recover silver was antiquated. There's not a whole lot of exploration with modern techniques. So the company picked up the project over almost a decade ago. And altogether, since early 2000, through 3 separate companies, a lot of money is being poured into it, and a lot more silver was found. Ron, you captured the essence of this transaction. We see it as a win because Andean Precious Metals currently are processing materials from its own mine and other surrounding projects like Pulicayo, but it's not getting enough of that feed into their plant. So this transaction would enable Andean Precious Metal to fill and increase their capacity utilization. And also because the Pulicayo grades are about doubled of what the grades they're processing right now. Within 3 to 6 months, we're going to see likely increased production, marked increase in head grades, better recoveries, and better cash flow for Andean. And that translates for Silver Elephant is the transaction protects Silver Elephant's cash flow. So we are, so long as they're hauling materials, we'll be getting close to we'll be getting $5 million over the next 18 months, including $3 million in the next 4 months. So we forego a bit of upside, Ron. However, we're protected on the downside. And, given a lot of the uncertainties, the company believes it's the best way to go and for our shareholder interest. Well, certainly that is the plan. And Ron, as you said, transaction, even though, it is material because at the surface layer of what they call the oxide materials, which is compatible to be processed at Andean's Precious Metals facility, is only represents 6% of the company's resource. So the crown jewels still sit right beneath the oxide layer, of which then we're approaching onto what they call the sulfide layer. The company is commencing studies to provide additional colors on the economics of the sulfide project. And I think, the studies, the numbers will come out sometime in 2024. And just about the time when that oxide layer gets removed, the company will be in a position to make a production decision. And now, Ron, of course, if we're going to build a plant and be processing on site Pulicayo, there is some capital expenditure required. And we're looking for additional partners such as Andean Precious Metals to help us finance that portion of to help finance the production on site. And again, to further minimize our dilution and risks and provide that upside for the shareholders as silver prices run up. Yeah, Ron, you're right. A lot of times, in our view, Ron, not only is Bolivia the 6th largest silver producer in the world, it's one of the most stable countries in South America to operate in. It's got a currency that's pegged to the US dollar. There's a freely exchange. There's no currency control. And we have also very strong community support. Within the region, within sort of the 200 kilometers of where Pulukayo operates, over 40 million ounces silver is dug out of the ground. And we believe that's only the start, because up to year 2000, there's almost no foreign investments in the country. And however, I think the tide has turned, and the pendulum has swung from very left-wing mentality to opening for foreign investments. So over the last few years, close to $500 million being raised, sort of treasure, hidden treasure. And we've been in Bolivia in the last 10 years, and we're very comfortable with Bolivia. It is a mining jurisdiction, and people are very accustomed and familiar with mining. So we believe the risk is very manageable, and we're very happy to be operating in Bolivia. For sure, we're looking at a 20 kilometer strike and about 5 kilometer width. So it's a big rectangular box. There are a number of anomalies that the company had identified through geophysics. The 600 million ounces of silver was dug out of just one vein, and there's been several parallel veins that have been discovered. Okay. And not only that, there's also satellite deposits such as Paca, and that is a deposit that we're working with Indian Precious Metals. And we're very, very confident with additional explorations that further discoveries and silver ounces will be found. However, it is not the highest priority. Exploration costs money, and there's always risks involved with making discoveries. We already have 100 million ounces in the ground, and we're one of the few, probably can count within two hands, of a deposit this size controlled by a junior company. So I think that affords the company with a lot of flexibilities in heading towards expanding resources if silver prices were to go up further, or focusing on developing our existing resource. If the situation of the market remains challenging, and we can look for ways to get the higher grade areas of our mine into production and generate cash flow. But silver prices hasn't really caught up to inflation. So even though silver has gone from $4 to right now $20, the silver miners are not making money. And that includes if you go down from the First Majestic Pan American Silver all the way to the junior developers, producers. So I think not only are we looking to upgrade Silver Elephant to becoming a producer, but we're finding partners and structuring in a way that would minimize our potential losses, or protect our eliminate any potential losses, but while giving a bit of an upside. Like I said, we're giving up 5% of the resources to generate cash flow, and should the market turns and silver start outperforming inflation, then we could be looking at getting additional leverage in silver by taking on a bit more risk and ownership. Ron, like you, I don't know how long you've been in the mining investment business, but I spent my first 10 years from 2000 to 2010 as a retail investor. So I'm like much of your audience are pulling up a table and looking at the different ounces in the ground and their valuations and their permitting stage and their grades, and do all those computations. At this current valuation and juncture, I see as an incredible entry point. It is almost the same as it was in 2004, when there was absolutely no interest in the street, and you can cherry pick, you can have the pick of the litter. So this is different from, say, 2009 or 2019, 2021, where you had a knee jerk of prices, and then you had a very quick rebound. And this is a very slow bleed, and subsequently, I'm not sure sort of the trajectories of the rise. Just real quick, from a technical perspective, $28 is a very big resistance level. That's why you're seeing a very heavy managing and concerted effort to put a lid on that, on the $28 level. However, if that $28 level is overcome, every time that happens, silver prices zoom up, close to double, went from $28 to $50 in a hurry back in 2011 and 1980. So, and that's why now, especially now that $20 silver is really a great accumulation entry point. And regarding the pick of the litter, Silver Elephant is one of the few stories out there with 100 million ounces of silver that's being like a baby thrown into the water. So you don't have to take on that exploration risk buying companies that has no resources in the ground or in jurisdictions that that you don't feel comfortable. And right now the company is trading at the lowest price ever, despite it's going on to becoming a producer. We're selling at $10 million Canadian market cap, which is unfathomable. Everybody who's financed the company's entry point, like myself, is 3 times that. So I would assure Ron, I think in the end, our projects are in good standing. We're going to shortly demonstrate we have a very strong local support. Otherwise, the mine would not have been put in production. We have a joint venture partner with over $70 million US in the bank. And the company is not looking to undertake any additional equity diluted financing if all goes well for the next 18 months, potentially longer.
Thank you for joining us on this illuminating journey into the world of silver elephant mining and the future of silver production. We hope you've gained valuable insights and are inspired by the possibilities that lie ahead. Stay tuned for more fascinating stories and insights. Please like, share, and subscribe to our channel. Until next time, remember, the future is as bright as silver itself.